Hi, in this video we will be talking about breaking down your expenses. Watch this video to the end to learn what you should and shouldn't claim when working from home. Welcome back to the International CEO. When working from home, understanding what expenses you can and cannot claim on your taxes is essential to maximize your savings while staying compliant with tax laws. This guide breaks down the various categories of home office expenses and provides detailed advice on which ones are deductible and which are not. Here's what you need to know. Eligibility for home office deductions. To qualify for home office deductions, the Internal Revenue Service, IRS, stipulates that your home office must be used regularly and exclusively for business. This space must be your principal place of business or a place where you regularly meet with clients or customers. This definition rules out multi-purpose areas of your home. The space must be dedicated solely to your work. Direct versus indirect expenses. Expenses related to your home office are categorized into two types: direct and indirect expenses. Direct expenses are those that apply only to your home office, such as repairs directly in your office or office furniture. These are fully deductible. Indirect expenses benefit your entire home, like utility bills and general home repairs, and are deductible based on the percentage of your home used for business. Common deductible home office expenses. Rent or mortgage interest. If you rent your home, a portion of the rent proportional to your home office space is deductible. Homeowners can deduct a portion of their mortgage interest. Utilities. Electricity, water, heating, and internet costs can be partially deducted. The deduction is based on the proportion of your home's total square footage used for business. Repairs and maintenance. Expenses for repairs or maintenance specifically in your home office area are fully deductible. General home repairs, like fixing the roof or servicing the HVAC system, are partially deductible. Office supplies and equipment. Office supplies like pens, paper, and other consumables used exclusively in your office are fully deductible. The same goes for office equipment like computers and printers, although expensive items may need to be depreciated over several years. Non-deductible home office expenses. Capital expenses. Major renovations are expenses that add to the value of your home, like building an addition to create an office space, are not deductible as business expenses. However, these can be a part of your home's cost basis for tax purposes when you sell. Commuting costs. Costs associated with commuting from your home to another work location are not deductible, as these are considered personal expenses. Home decor. Expenses for decorating, such as curtains, paint, or artwork that are not directly necessary for your work are generally not deductible. Simplified versus regular method. For calculating home office deductions, the IRS offers two methods: the simplified method and the regular method. The simplified method allows a deduction of $5 per square foot of your home used for business, up to 300 square feet. The regular method requires calculating the actual expenses of your home office and apportioning them based on its size or usage, which can be more complex but potentially more beneficial. Documentation and compliance. Accurate records are vital for supporting your deductions in case of an IRS audit. Use a separate business bank account to simplify tracking of income and expenses. Special considerations. Self-employed versus employee. Employees are not typically eligible to claim home office deductions unless they are statutory employees. Self-employed individuals and independent contractors have more leeway in deductions. State-specific rules. Some states have different rules regarding home office deductions. Consult a local tax professional for guidance specific to your state. COVID-19 considerations. Due to the increase in remote work, some rules and concessions have been made regarding home office deductions. Keep informed about temporary tax changes that might affect your deductions. Working from home can offer significant tax benefits through careful and legitimate claiming of home office deductions. Understanding which expenses are deductible and how to calculate them can help you maximize these benefits while remaining compliant with tax regulations. Always consider consulting with a tax professional to tailor these guidelines to your specific situation and ensure that you are making the most of your home office setup. Detailed breakdown of home office deduction categories. Working from home offers a plethora of potential tax deductions, but it's crucial to understand the specifics to ensure you're maximizing your claims without stepping over legal boundaries. Let's delve deeper into each category of home office expenses. Rent and mortgage interest deductions. If you're renting your space, the percentage of your rent that corresponds to the portion of your home designated as an office is deductible. Homeowners can apply the same logic to mortgage interest. This doesn't include the principal amount of the mortgage, just the interest. Calculating this starts with determining the percentage of your home devoted to your office. For example, if your home office occupies 10% of your home's total square footage, then 10% of your rent or mortgage interest may be deductible. Utility costs. The utilities you use can be partially claimed as home office deductions. This includes your electric, water, gas, and internet bills. Similar to rent and mortgage interest, you calculate the deductible amount by determining what percentage of these services is used in your home office. If your office is 10% of your home's total area, then approximately 10% of each utility bill is typically considered deductible. Repairs and maintenance. Repairs and maintenance can be split into two groups: those that are directly for the home office and those for general home upkeep. If you repair a window in your home office or repaint the office walls, these expenses are fully deductible. However, if you make repairs in other parts of your home, you can only deduct the portion that corresponds to the business use of your home. Office supplies and equipment. Purchasing office supplies like stationery, printer ink, and small office equipment solely for your home office is fully deductible. Larger items, such as computers and furniture, can also be deducted, though expensive items should be depreciated over several years according to IRS schedules. The key here is that these items must be used for your business. Personal use can complicate deductions, so maintaining a clear boundary between personal and business use is crucial. Strategic planning for home office deductions. Understanding the nuances of what you can deduct is one thing, but strategically planning how to maximize those deductions can significantly impact your tax savings. Timing large purchases. If you anticipate being in a higher tax bracket in one year compared to another, it might make sense to accelerate major purchases, like office furniture or computers, to take advantage of greater tax savings. Conversely, if you expect a lower income year, spreading out expenses can be beneficial. Regular method versus simplified method. The regular method, though more complex, often yields higher deductions for those with significant home office expenses. It requires detailed record keeping and calculations, as you must allocate a portion of each expense to your home office based on actual use or square footage. The simplified method is easier but might result in lower deductions. Annually evaluating which method to use can help you maximize your deductions. Audit-proofing your claims. With the IRS paying close attention to home office deductions, ensuring that your claims are defensible is crucial. Here are key steps to audit-proof your deductions. Digital records can be very useful, as they are easy to store and search. Consistency. Use your home office consistently for business purposes and document this usage. Professional advice. Consult with a tax professional. They can offer personalized advice and ensure that your deductions are in line with current tax laws. Common pitfalls to avoid. Several common mistakes can lead to issues with the IRS, including dual-purpose expenses. Expenses that have a personal and business component, like internet or cell phone bills, must be clearly and accurately divided. Estimating too high a percentage for business use can trigger an audit. Excessive deductions. Claiming disproportionately high deductions relative to your income can raise red flags. Ensure that your home office expenses are reasonable. Informal agreements. If you're renting and claiming home office expenses, having a formal lease agreement, even if renting from a friend or family member, can substantiate your claims. Long-term considerations. Thinking long-term, the way you handle home office deductions can affect other financial aspects, such as home sale exclusion. Normally, when you sell your home, you can exclude up to $250,000, $500,000 for married couples, of gain from your income if it was your primary residence for at least 2 of the last 5 years. However, depreciation claimed on a home office can be subject to recapture, impacting the exclusion. Future audits. Keep your tax records for at least 3 years, but keeping them longer, up to 7 years, is prudent if there are concerns about potential future audits. Maximizing your home office deductions requires a detailed understanding of tax laws, strategic planning, and meticulous record keeping. By comprehending what expenses are eligible, employing the best calculation method, and maintaining clear and accurate documentation, you can enhance your tax savings while ensuring compliance. Always consider engaging a tax professional to navigate complex situations and stay updated on the latest tax regulations, especially in a landscape continually reshaped by legislative changes and evolving work environments. Thanks for watching. If you found this video helpful, please give it a thumbs up, hit that bell, comment, and subscribe for more content on the International CEO. See you next time.